Well, joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale.
Hello. Finance expert Dale Gillham from Wealth Within. It's nice to see you again.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey, Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show.
Good evening and welcome to the Australian Stock Market Show. This is the show where you get to ask the stock market experts to answer all of those burning questions that you have and give our view for you on the stocks that you're interested in, plus a whole lot more. Last week, in what turned out to be a very flat week on our markets, the banks were standout performers, which is timely given our topic for tonight is best financial stocks to buy in 2021. Are Australian banks on the list? Big question, isn't it? I hope that you're all ready as we'll look at A2 Milk. We've got some great stocks, Lendlease, Clearview Technologies, Worley, Linus, among other stocks, along with answering some really incredibly interesting questions around portfolio construction. So keep up the questions. And it's so great to see that people are really thinking about what they're doing and not just focusing on what stocks to buy. Well, hello, I'm your host Janine Cox, and joining me tonight is my co-host Dale Gillham, and we're Australia's most trusted stock market educators. Hello.
Oh, hello.
Welcome.
Oh, welcome back. It seems like you're never here anymore.
I'm here.
Well, you haven't been here the last 3 Mondays. Like, are you here tomorrow?
This seems to be your ongoing thing, but it was a public holiday.
But you didn't answer me. Are you here tomorrow?
Oh my goodness. Was it a public holiday?
Yesterday it was. Is tomorrow?
Yes, so do I need to work on a public holiday?
Tomorrow's not a public holiday.
Yeah, I'm talking about yesterday.
She's avoiding my question, isn't she, guys?
Oh, gee,
I asked if you're here tomorrow, but you're just obviously avoiding
I'm going to change the subject now.
You are.
Well, shall we get into what happened to you over the weekend? You did the stuntman thing, didn't you? I wish I had a camera for that.
You did it. No, just to explain to everybody, I was riding my bike, all minding my own business.
It could only happen to you.
Riding my bike along the creeks and everything else. Well, not on the creeks, but in the bike tracks and everything else. And a group of people with a dog, or 2 dogs, were playing. So I slowed right down and I was almost stopped, but then a dog ran under my front tyre and I ended up on the ground. The dog is fine, no dogs were harmed in that, and there was no filming of that. So, but you think it's funny that I fall off my bike.
Do you? I call you a stuntman now.
I know, I was rolling on the thing.
I'm glad that you're okay anyway.
I thought about doing that sort of backflip and getting up and going, yes! Yeah, but it didn't actually work. But anyway, remember, this is your show, not Janine, so if you do have a burning question for us, don't just sit there, do something. A question not asked is still a question unanswered, and this may be holding you back from getting better results in the stock market. This means you do need to send in an email, or better still, upload a 30-second video of yourself to Dropbox, then send us the link. That's what we really prefer. Now remember to send all of your questions to info@wealthwithin.com.au and type Wealth Within Live in the subject line. As always, this is a two-way street, and that means you hitting that subscribe button and we'll do our bit in answering your questions. They don't hit the subscribe button all the time, do they?
Moving on, it is the second Tuesday in the month, and this means that we'll look at the sectors of the Australian market. So let's get into the charts right now. I nearly did your trick.
Let's get into the charts now.
Inbox was the one. You know, if he says Inbox again, you have to write in and tell me, because I might miss it. Yeah.
Okay, no. Let's look at the thing, okay?
All right. The leaders board is showing that for the year, financials are on top. Well, you know, that's not new news to us. It's almost old hand now. So energy, slightly behind. So we can see 13.57 is the financial sector. The energy sector up 6.6%, which is doing nicely. And materials 4.62. Consumer discretionary up 2.4. Now, the overall market, the broader market, only up 2.2 approximately. Now you can see as we get down further, I must mention communication services are still in the positive, which is good to see. But then we've got all of these ones in the red. So info technology went from being the leader.
It was the leader last year, wasn't it?
Yep, to the laggard. And we've got healthcare as well, almost, on parts, 8.9%, but who's counting? And then you've got 13.4% down for the infotech. But utilities is actually following behind, minus 6.37.
That surprised me a little bit. I thought they'd do a bit better than that.
Did you? But see, I'm thinking now that because it's a switch in the sectors, gone to what traditionally was defensive, that's financials, which wasn't defensive, remember, through that big decline after all. So now it's more like a growth stock, the financials, the banks, etc. And these are all growth. So energy's growth, materials are growth.
Yes.
Consumer discretionary is a bit more a plotter, so that's, middle of the board typically we expect to see. But consumer staples is also a bit more of a plotter as well, but it's actually down 2.4. So I was a little bit surprised about that, but we saw Coles come off in a big way, and we saw Woolies was another one. We've seen pull back a little bit from its high as well. So
Coles doesn't worry me. I think it's just easing off a little bit at the moment. I think it looks all right.
Yeah, okay.
But it's just easing right off again. But when you're looking at infotech, you've got Afterpay falling heavily, you've got Appen falling heavily, you've got WiseTech falling reasonably well. So they're sort of the FANG, the whack stocks that we have in Australia that is the alter FANG stocks or the opposite.
And look, traditionally healthcare has been a big growth area, and yet it's the one that's really lagging a lot.
Well, it did well last year, healthcare, didn't it?
So 8.9. So maybe some of you out there are a bit surprised to see healthcare had dropped off so much.
Okay, so do we want to look at some charts?
Yeah, actually, what I wanted to show them first is the spaghetti chart, which I don't think we've shown for a little while. So this is a quick snapshot showing, and this is a monthly view. So really what we're interested in is the short-term moves on these sectors to see what's going up and what's going down. So your table shows a quick snapshot, but this is a diagram.
So what, are we looking at from here onwards on all of them, or are we looking back a bit further?
Well, I think you're looking at the overall move as well as looking at the shorter term. So the last sort of month or so we really want to see.
That sort of bit here from
and also looking at the overall projection.
And looking at what it is from right back through to here. Okay, cool.
Yeah, and we're seeing here during the past month or so, we've got the information technology is obviously really strongly down. So that's the one that's standing out as being, it had been so strong and in front of all the other sectors in the market, but now it's not such a great one. So this chart's really, we show this to students, I think, really early on in the diploma because it's a pictorial view of what we're looking at in any data. The discretionary is starting to come up a little bit. Just in the last month we've seen that. And then we're looking at materials as pointing down a bit. Energy's sloping upwards. I like that nice slope.
Nice, isn't it?
It does look good. And then we're seeing the same with financials, a nice incline on that rise coming up, so a nice trend up. But we have seen a really strong move on some of the banks lately, so you'd expect them to start slowing down a little bit.
Especially ANZ and Westpac.
Yeah, so we've got XTL, so we've got the telcos, which are pretty flat at the moment. And then we're seeing the industrials. So I like to see the industrials going up. They have been going up, but now we're seeing this decline coming back again. So, but the last month or so was just a gradual move overall. And we've got staples as well. And looking at that, isn't it? It's a bit flat. And healthcare is obviously another one strongly down. A big slope coming down, and the utilities are just pointing up. So that's really nice, isn't it, to see that?
Yeah, okay, so that gives us an indication of what the sectors are actually doing. So right now we're still looking at energy, financials and materials.
Yeah, so if you're looking for areas that are trending, this can be really helpful to see the direction of those sectors trending up.
Okay.
So I think that's probably it for us.
Well, thanks for the wrap up on the market, or also the sectors in the market. Now, we need to get into our first question tonight, and this one is from Hugo, who says, "Hi, Dale and Janine, I'm curious to find out your opinion on A2 milk. It seems as if there may be an opportunity to take a position in the near future given the significant downward move since July last year. What do you think of the medium to longer term prospect of this stock, and is it likely to find support and turn around soon? If I'm interpreting correctly, the monthly chart appears to be a present unconfirmed downtrend and no reason to enter just yet. Thanks again for the work you both dedicate to the show." Thank you very much, Hugo. So let's get into A2 milk. It's just going down at the moment, isn't it?
It is. So when he said unconfirmed downtrend,
well, I think
it's definitely in a downtrend.
It's definitely in a confirmed downtrend on a monthly chart. It's definitely in a downtrend on a weekly chart if we're looking at all that.
Yeah.
So, and I think
it could fall further. There's a possibility it may fall further. We've just got to watch it and see if it actually makes the move to turn around. But a couple of weeks ago, it was sold off really strongly.
Yeah, it was.
So that could be a flush out of the bottom, but then we don't know yet. We still need maybe 3 or 4 weeks to know.
Yeah, I think we're still seeing this big move down from that's what it's June 2020, so not August. So August was already coming down. Oh, sorry, that was August there. So it was already coming down from a June through there. And right now, it doesn't look like it's finding some support, does it? Really?
Not at the moment.
Not at the moment. So right now, and he's asking about the medium to longer term view of it right now until it finds support. The medium-term view is down. It really is. The short-term view, the medium-term view is down, and we can't assume anything else because when it comes to investing and trading, what the stock has been doing, we need to assume it will continue to do so until it doesn't anymore.
Yeah.
And so right now, it's just wait and see, to wait for it to find some support and then go up. So
yeah, and we're looking for the earliest indication that the trend may change.
I do like the stock though. It's just waiting for it to find some support.
It's a good one to have on the watch list, isn't it?
Yeah, so I think that's all I need to say on that stock.
All right. Next, we've got a question from Daniel. Hi, Dale and Janine. I've purchased both of Dale's books, Creating a Trading Plan, Trading Log, etc., as outlined in the books. At the start of this week, I've purchased LLC, as I believe it has confirmed its direction and is at the beginning of an uptrend. EPS over the next few years is quite strong, and I have also noticed it has a gap to fill on the weekly chart from March last year up to 16.75. Would love your opinion and analysis on the stock. So that's fantastic. Good question. Interesting stock.
I'd like to know the rules that he's actually bought on.
Yeah, because I mean it may have been a buy some months ago before it had that decline, but at the moment depends on what time frame you're trading on, really. Well,
it does. I mean, you know, it was a strong move. So let's go and have a look at the chart anyway and get onto that. But you can see the strong move there from 2 weeks ago where it had a $2 range on an $11 stock.
Yep.
So big move. So I think, you know, maybe they've seen, because he's bought it this week, so he's just only bought it this week or last week. I'm not sure when the email came in. So it would have been in since last Tuesday. So he's bought in after this big strong move thinking it's a new uptrend. Is that a smart move?
No, because, I mean, at this point it's sideways, really. It's had a trend. The trend was strongly up at one stage, but that was a couple of months ago.
I do think it's quite early for him at the moment, and hasn't really confirmed it's moving up into an uptrend. It hasn't confirmed it's stopped falling. It's had a big bar up there, so that low hasn't been tested. There's a whole lot of little things around it to me that's not.
Yeah, I was wondering when I read the email, did he sort of think that maybe it was in the uptrend some months ago and he missed it, and then he saw it move up strongly and thought, oh, I missed it, but it's going up again, so it means
Yeah, I'm not saying it's not going to go through that previous high that we're looking at over there. I'm not saying it's not going to do that, but I'm just saying right now you've jumped too early. I think that's really what I'm saying is you're not trading on confirmation, you're speculating that it's in a new uptrend, and that's really against the rules that Janine and I talk about all of the time, whether it's in my book or in our courses. Always trade on confirmation, not speculation. So, but thank you very much for the question. It was great. Now we do have a question from Ari who says, hi, Dale and Janine, just wondering if you could possibly give your insights into Clearview Technologies. It's been on my watch list for a year or so now, and I was about to jump in at 10 cents mark mid last year, but unfortunately never followed through. Now, with the reinforcement from your views on the energy sector possibly looking to flourish this year, I'm looking to hopefully jump on board in a couple of months after the market pullback. Any views and opinions would be greatly appreciated. So keep up the great work on the show. It's been an amazing help to many. And thank you very much for your kind words. I'll let you have the mouse on this one so you can talk about it. How's that?
Great. All right. Now, just looking at the chart, I think from a longer term perspective, we've seen the trend go down to this low and then the trend's turned and gone back up. So it is trending up.
It is trending up.
And last month it was looking really nice, a really strong move up. But of course, that was almost the same sort of thing that happened here with this big push high, only 2 weeks up, and then all of a sudden it reversed strongly. So, you know, I think he's wise to be cautious at this time. And it's always a challenge, isn't it?
Yeah.
If you were looking at the stock some months ago and then you saw a potential entry, and look, it may have been possible to get a trend line in there. There were potentially, you could see the trend start to move back up again here, and it may have been possible to buy it then, but now he's going to be chasing that one. So then when's the best time to enter? That's the thing. And I think it is about when the risk is okay. To me, that's for a stock like this that's more volatile. And what I'm looking at particularly is not just the initial stop loss, but if you were to wait till it was moving back up again, say it moved up strongly, it's a 46% drop to the nearest low.
Yeah, that's huge.
So that just tells you in itself how risky this is potentially, and that if it was to come back and take out that low, you'd be taken out pretty quickly. In fact, people are probably being taken out if they bought in. Depends where you bought in, but if people got carried away with what it was doing 2 weeks ago, they would have been down 18.7%, the people who bought in up here in 26th of February 2021. So, it's always difficult, but it has actually proven that it's broken out of this sideways move, which I think is really positive. So I'm not saying I don't like the stock. I think it's great that it's in an uptrend, but I just want, now that you're up, I just want to wait and see the next couple of weeks if it recovers.
I think I'm with you, because I think it's what are the rules to get into it right now, just not jumping into it just because you missed a trade back when it was 10 cents. So that's one of those things. I know some people do, they go, I missed it, so I'll jump in. I'm not suggesting this gentleman's doing that, but it's more about, in my view, it's like, what is it going to do? What does it have to do to prove it's strong? And what does it have to do to give you a signal that it's going up now rather than going down? Because he's saying maybe I might buy it in the next couple of months when it comes back, but it may not come back. But what if it goes up? From where it is, and then he kicks himself because he does. So consider both sides. It might happen to him again, is what you're saying. It might happen to him again. It might go up, and he goes, "Oh damn, I missed it again." So that's where having good buy and sell rules, understanding where you're going to buy and where you're going to sell, is really, really important. So, but I mean, that's all I've got to say on this stock. But it's, but I mean, I do like it, like you, but I'm not super excited.
Yeah. Okay. All right, well, that was Clearview. The next question we have is from Chris. Hi, Dale and Janine. Have been watching your YouTube over a year. Love the program. I've been investing in stock market nearly 2 decades. One old day rule says that there is no go zone when a company has a debt ratio above 25%. But looking at stocks these days, I hardly see any company meeting that criteria. In fact, a lot of them, including the top 100 companies, have the ratio over 50%. As an old school investor, I found it hard to choose these companies with a high debt ratio. Is the debt ratio no longer relevant when coming to choose a stock, since the companies can refinance their funds so easily these days? I'd like to hear your view on this. Thank you. And that's really insightful, isn't it?
That's an amazing question. I love it. I really do. And I know this is one of your bugbears, debt on companies. And I know part of it is like the banks as an individual, they let us borrow 90% and stuff like that. And yet, if a company ever borrowed that, we would never invest in it.
Yeah.
So it just tells you how much the banks want to play on us as individuals. But what's your take on company debt?
Look, I mean, the market, I would first talk about what the market expects, because the market looks at companies that have, typically they'll see something around the 35% is okay. But once you start heading up around that 65%, then the market will start ranking that as differently. So, but it could depend on the company, because if they're more growth orientated and they tend to have high capital costs and there's a lot of investment going on in the company, then maybe 50 to 65 is okay for that company. So it's on a case-by-case basis sometimes. And often companies will have plans in place to reduce the debt. And as was alluded to before, because the cost of borrowing these days is so low and they're refinancing and rolling over their debt, the market's not looking at it as seriously as it was before, because interest rates are so low and they could stay low for longer.
Yeah, I mean, is this also the current debt ratios a bit more of a product of the COVID environment that we had last year, with companies having less income coming through and still needing to do things?
Well, look, you'd have to say that they're not necessarily going to clear debt as quickly, and probably, you think about what the government's doing. The government's using the opportunity with such low interest rates to be able to use the funds that they have at their disposal to get things done at a low cost. Okay. So a lot of people are doing the same thing, so it makes sense at a time like now that companies could do the same thing as well.
Okay, so in summary, you're saying up to 50% okay, but preferably around about 35%, above 50%, probably not.
Yeah.
Okay.
Above 55, 65, that's when you're starting to get into a zone where the market might want to make an adjustment to them if they start, especially if they report and they get some negative reports, the market would look at that negatively.
And they probably react quickly.
But it is company dependent as well. That's the other thing.
Cool.
So that we hope you're enjoying the show so far. We've got lots more to come. And before we get into tonight's topic, now's a perfect time. Show your support for the team who support you and put tonight's show together. Hit that subscribe button and remember to also like the video. Now, getting into the topic for tonight, which is best financial stocks to buy in 2021. Are Australian banks on the list? Drum roll.
Drum roll.
Australian investors have been led to believe that the strategy of buying and holding stocks in the financial sector over the long term is the best way to invest. And this is due in part to the fact that stocks in the sector are considered low risk, safe investment, and because they usually pay a dividend. However, history's demonstrated how this strategy has not only resulted in investors' portfolios underperforming, but at times experiencing significant losses. So to make sense of all this, we're going to review how the financial sector has performed and in particular how Australian banks have performed in previous market corrections so that you can learn how financial stocks react under these conditions. We'll also look at where financial stocks are heading in 2021 and share our view on the best financial stocks to buy in 2021. That's a big mouthful. Will we get through all of that, I wonder?
I'm not sure we'll get through all of that, but let's go into first up. I mean, Janine, you really have, you always enjoy talking about the financial stocks and the sector, so I'm really concerned you're going to go over time on this one because you do like them so much. So just in case, I bought a sock for you as a last resort and a drastic measure tonight to stop you talking, but I've also got the gaffer tape to make sure it stays in place. So there you go. You can have it.
Did you guys know about this? Well, I hope it's clean and that you haven't used it because you might have to use it on me, but you'd be lucky trying to get that on me.
No, I just ran 10 kilometres in that one this morning.
All right, thanks very much for that. Look, I don't know what we can do with that either, but I'm sure we'll find a good use for it at some stage.
Okay. Now, you and I have both warned investors about applying a buy and hold strategy to any stocks, including banks, and we could see that one day the love affair that existed on shaky foundations between investors, financial advisors and their bank stocks would actually be exposed.
Yeah, and the charts have confirmed what we've been saying for a long time, that banks are no different to all other equities in that they all are cyclical in nature and therefore experience major highs and major declines. So that's the challenge with it. And we talk about the stock market and how fear and greed drive it. And many will have seen Wolf of Wall Street and Wall Street, the movies. Dale said that we should be talking about trading places.
I love
but
that movie.
He clearly was not thinking about the stock market at the time. And know that major financial collapses, while they are due to human psychology and the emotions of fear and greed, it's a financial industry that sets the dominoes in motion to eventual financial collapses. So it makes sense that fear and greed would affect bank operations and this would be exposed eventually. We all know the findings from the Royal Commission, don't we?
Wait, and they're still getting wash out for that anyway. But okay, Janine, what are we actually going to look at first?
All right.
You're going to bring up Optima?
Yeah, first of all, we're looking at the charts there, and I've got the
financial sector chart. We're going to look at that first, are we?
You took the words right out of my mouth. Yep. Okay, so we first of all have to think about the weight of the banks in the financial sector, and we know that in the market as a whole, and the weight of the sector as a whole. So the financial sector has a significant weighting and typically around 30-odd% over the whole. And it could be more now that we've seen the stocks rise so strongly, because as those stocks in the sector rise, if other stocks are not rising at the same rate, then obviously this is increasing its position.
Okay, so what are we going to show them on the chart?
Well, so the first thing to really look at, we need to look at the big picture. The monthly chart's the king of all the charts. So remember that. Don't go to the daily chart first. Always look at what's happening in the big picture.
So this is the banking industry?
So this is the financial sector.
So next, okay, so we're looking at
the financial sector. Have you been listening to me?
Yes, I have. I'm sorry. I'll just shut up.
Okay.
It's your topic.
Okay, so we're looking at the financial sector, and we can see there that we've gone through this decline in the GFC, obviously, and the All Ordinaries did a very similar thing. Obviously, the weighting of the sector has influenced the shape of the chart, and the All Ordinaries is very much the same. So at the time, we thought potentially after the GFC that the market could actually capitulate and we could get another low coming down.
Thinking,
Yeah, so we had to mitigate against that risk. But in essence, what's happened in the financial sector is a good demonstration that it actually recovered, but it didn't recover fully. So for our market to really push higher through those all-time highs that we've seen more recently just prior to COVID and with the GFC high, in order to move strongly above that, the financial sector needs to keep going. And at the moment, it looks like it's got the potential to go up more medium term, doesn't it?
And it's interesting because it hasn't broken through that previous all-time high prior to the GFC.
Yeah, I think the last couple of months has really signalled the fact that we're moving on. Until then, it could have easily just fallen away. And that was always a risk with it, wasn't it?
Okay, so now let's look at the history of the banking index. Is that what we're looking at?
Yeah, so let's have a look at the next one. So we're seeing that we want to have a look at what the influence of the banks have been more recently.
Yep.
So this index hasn't been running very long, so we're going to look at the weekly chart, and you can see there that we've almost come up to that prior high there. This was a September 2019 high.
Yep.
And that's a really great thing to see. This is more like a growth stock that we're seeing in terms of the way that the banking sector... Well, it is the way it's
unfolding at the moment, isn't it?
Yeah, so this is terrific. So to see this sort of unfolding is great. Now, how long was the recent decline?
Yep.
So we want to go back to the financial sector and just have a really good look at what this decline represented. So I'm just going to put something on there. Now, I'm going to count... We know that the Royal Commission really started around this time, or the problems around the banks started around that time of the high. And interesting how it was sold off.
Yes.
Before that. So people in the knew that there was something that wasn't right. Now, 50% decline we saw overall on the financial sector. So that's including property as well, of course. And property was hit really hard in the GFC and perhaps more than the banking stocks themselves. They proved to be more volatile. But we've seen a 50% decline, and now that was in 261 weeks approximately. Thank you for that.
I thought I'd help you out a little bit.
That was an excellent contribution that you've made there. Now, we look at the rise off that low, and we can see that so far the financials have actually recovered about 72% of that decline, which is pretty amazing in the time frame that we're talking, you know.
So how long have the banks taken, how long have they taken to come back? I mean...
Oh, look, you know, as you can see, it's not even a year, is it really?
So what's taken 261 weeks to fall, they've risen in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12... Almost 12 weeks, and they're 2/3 of the way back up, isn't it?
Yeah, 12 months.
So, sorry, it's a monthly chart. So 12 months. That's pretty good.
Yeah, and so you would expect now that the financials would continue to move up over time.
This is not 261 weeks, is it? Because that's from 2015. So that's a bit wrong. No, it's not. 52 weeks in here. That's right. I was thinking. Sorry, I was looking in days. So I'll just shut up again.
Now, what we really need to do is we need to take a look at what the individual. So we know that the individual banks really got pummeled. So we know this index is dominated by the big four.
Okay. Yep.
Okay, so some of the biggest weights on our market. And we know that Macquarie actually didn't get affected in the same way through the Royal Commission. So you can see here that when the Royal Commission hit, which was all the banks went into decline, the big four, from around 2015.
Yeah, so what did Macquarie do?
Macquarie went from strength to strength.
Yeah.
After that time.
And it was the best performing bank after the GFC.
Yeah, but...
And I think it was the best performing one out of the COVID, wasn't it?
Well, look at let's just have a look and see, because during COVID, we could see...
It fell further than the other banks during COVID.
Yeah, but Macquarie fell 53%. Let's have a look at what the financial sector as a whole fell during COVID, just as an idea, to see the sort of volatility. So if we go back to, what was it, February here? Gee, that seems like so long ago now. We're talking 45% for the whole sector. Okay, so that's where you can see Macquarie traditionally has been far more volatile than other banks. So I'm just going to use CBA as an example. Now I'm just going to jump quickly to something. So just to do a quick comparison to Macquarie to give you an idea. So you can see that during the GFC, what happened with Commonwealth Bank. We're talking about the history still.
We didn't fall anywhere near as much, did it? Oh,
right.
No, it did. Look at that.
Yeah, so 63% fall during the GFC. So this is why, like, a lot of people were still buying and holding banks even after the GFC had hit, even though banks still could fall as much as the overall market and big stocks.
Okay.
and we've seen a 44% decline in Commonwealth Bank, who most people would think was immune.
Yeah.
I didn't even think that Commonwealth Bank was going to fall that far.
Well, all the big four banks fell 35 to 50% from 2015.
Yeah.
All of them.
Yeah,
So-
and yet we've seen Macquarie fall more significantly during COVID than what, say, Commonwealth Bank. And that's what I'd expect, because it's about knowing the behaviour of the shares that you're buying. That's the real key. So if we just take a quick look for a few minutes, if we've still got time.
Well, I don't know, I might need to get my sock out again.
Yeah. See, 85% decline in the GFC.
Wow, that's huge.
Right, so that's much more than, say, a Commonwealth Bank or an ANZ.
So it's a lot more volatile. So, okay, so where do you see the banks and the financial sector heading into 2021?
Yeah, okay, so we're looking at financial. I think financials are going to be up in 2021. There's no doubt about it. We're already up in the 13s. It's just a question, can the financial sector maintain that gain, and can we get a 20% incline? Now, you and I had the view that the whole market is likely to increase in 2021 through that high, and we're going to see a push on. So for that to happen, the banks have to go.
The banks and materials generally have to go.
Yeah, so even if we do see a short-term slowdown in the banks at the moment, then we expect that later in the year we will see a move back up. I'm not saying that this doesn't go without ups and downs, because there will be still ups and downs across the sector.
Okay, so what is your forecast for the sector then?
Okay, so the forecast for the sector is to see it push through that all-time high, and we're going to end up somewhere around these above 8,000, 8,400 in 2021.
Okay, so you're talking 30%.
There's a
growth in the
potential
sector.
for it to double what it's already done this year. But what we need to do is we need to watch over the coming months to see how the banking sector reacts around these levels, around the 6,600 to 6,800 as it comes up to this high here. But
okay, so this is the sector. So
this is the sector, not the market.
Yeah, and I was just saying, don't confuse it with saying that every bank's going to go up 30%.
Yeah, correct.
Because some people think, well, you think the sector's going up, so all the banks will win. No. So what's the likely upside for the banks? Because that's really they're the big chunk of this financial sector.
Well, to me, they're driving it, exactly as you say. And so real estate stocks have been doing well. We've seen from some, but some have been down or sideways.
Yes.
So I think, like you just said, there are going to be some that will be off this year. So there'll be picks, and I'm not necessarily going to say what the picks for all of the sectors are.
I know some of the insurance companies I wouldn't put my money in.
Because we might be able to do another show on the real estate sector. That's what I'm hoping. So looking at this one, we can see that once the financials go up, we expect a similar sort of move for the big banks as well.
Banks. Okay, so we're looking at double-digit returns for 2021, probably.
Well, we've already got double-digit returns for banks, and I think that they will be able to hold on to double-digit returns this year.
Cool. So, and do you think they'll be able to get over 20%?
I do.
Okay.
I think there's a really good potential at the moment, given the way the chart's unfolding.
Okay, so we always get both sides of the story, don't we? That's really what it's about. So what's the downside risk on the banks this year?
Yeah, and that's the real challenge,
will they
isn't
be
it?
volatile in getting that? That's the other question.
I think they will. So I think we're going to see a bit of a blip in towards the middle of the year as we hear things about the budget, what's happening in the economy as coming into the end of the financial year. But what will happen is that the big institutions will reset their portfolios in July. And so that, I think that will mark a point for the financial sector and the banks as the next part of the move up.
Yeah. I mean, obviously, with interest rates at all-time low, that affects the banks. If interest rates, from what I'm reading up, experts are not expecting them to go up till next year. They're not worried about inflation this year. So are banks right now still...
Banks are preferred picks. However, it doesn't mean that we would say just hold on to the banks. So it depends on the time frame over which you're trading. You know that we look at charts. For example, if I bring up a chart of Commonwealth Bank, we look at weekly and monthly charts. I've got the chart of the month there. So if you're trading on a medium to longer term time frame, then you're using this time frame chart to manage it. So you're not getting sort of necessarily whipped out if the banks do come back. But then because of that volatility being in the banking sector still at times over the coming year, then you could see your portfolio fall somewhat if you're still continuing to hold a lot of banks in your portfolio before they eventually move up again.
Okay, so you're saying don't fall in love with banks, but have them in your portfolio.
Be prepared to sell them, if the risk increases too much. But I think this is a better time, obviously, to be in banks than it was the last 5 years. And so you'd have to say that if our market's going to keep going up I'd say that this is going to be good
Well,
for the
they're
next
all
few
going
years.
down for 5 years,
Yeah.
and they're all known to be able to trend for multiple years, and they've been going up for 12 months.
Yeah.
So it stands to reason that these would be our preferred picks or some of our preferred picks, but I know we don't really like giving, or we don't prefer to give stock tips or specific
No, because the banks have
stock
been
tips.
rising so strongly, and then we talk about banks and people go out and buy them, but not based on rules. And that's
Yeah.
a problem, because then when the banks fall away, how are they going to manage their risk?
So we wouldn't, rather than give them a stock tip, we'd rather give them strategies and how
Yes,
to actually
exactly.
find the stocks and how to find the stocks and what to do, which is what we've been doing over the last few weeks and few months actually, showing people how to filter down to stocks, how to exit strategies, and why they should be looking at and doing better research at the front end.
Yeah, we felt we've already done that in terms of explaining that background to you, if you've watched a lot of our shows in the lead up to this anyway. So now it's just more about, I think what people want is they want to know, most people probably hold banks.
They do, because I know
So-
how many portfolios do you see over the last 25 years that people have been giving to us, and every single one has banks in it. There's just not, it's somebody, especially somebody over 50 or 60, and they say, here's my portfolio, and you know there's a bank in it.
Yeah.
Before you even start, it's always Telstra in it and a bank from that point of view. But we did briefly touch on other financial stocks, I know, because there's more than just banks in it. So what other financial stocks?
Yeah,
should
in the
people
financial
consider?
sector, you could have all sorts of things like companies that have technology
So
advances.
fintechs.
So some of the fintechs, some of the real estate stocks will actually be quite good. I think like insurance stocks have a bad name. They're a dirty word sometimes when we go to the investment team
especially
meetings.
health insurance.
Talking about insurance stocks, because they can flip quite easily, but there are times to be in those. They're not buy and hold, that's for sure. I mean, Buffett, didn't he buy a couple of our insurance stocks? IOG was one, I think.
Correct.
He bought in, and then it went up for a while, and not long after that flipped. So a lot of people who were buy and hold heard that he was buying it, went into it. Of course, that fueled the rise, and then they're stuck with it.
Well, Berkshire Hathaway is insurance.
Yeah.
That's what they do. You know,
But you know that, but little people follow what the big people do when they hear about it, but then they don't have rules and strategies to get out of it, like some of the big people.
But
do.
there could be some nice smaller players in some of the fintechs, and obviously technology is expanding over the next decade.
Yeah.
And what we're doing in there, and there'll be a lot more fintechs out. So, but again, in the end of the day, you're really telling us it's about stock selection, isn't it?
It's
about what are you picking? Are you trending stocks? What are your rules? What are you applying? What rules are you applying to the stocks that you're buying, regardless of whether they're a bank or not? And that's really what you're sort of saying, is do your research and do that. So, you know, so you've heard our view on the financial sector and the banks, and just remember that no stock is immune from a sell-off, and never assume that a stock that has been rising for years will continue to do so. And a few individual companies we selected to demonstrate the importance of managing the stocks. Now, when the market pulls back, it's not always the case that all stocks will fall together, which is why it's really important to focus on your strategy for each stock and let your rules to determine your decision making. So come up with the strategies and then apply those to each and every single stock that you own, not just blanket do it across the whole portfolio. I think that's what we're trying to say to people, yeah?
Yeah, that's really important. And each week you'll have heard Dale releases his view on the market and often comments on the banks. So remember to watch his market reports that are released each week, and remember that this is a week-by-week assessment of the market and is therefore a short-term prognosis that can change quickly. However, just be mindful that our longer-term forecast for the overall market rarely changes.
So important.
So if you were to ask me what is the best way to get started and learn how to trade the banks, I'd say buy Dale's book. And if you ask me about the second best way, I'd say still buy Dale's book. All you need to do is click the link in the description below to get your copy. It's that easy.
Geez, how'd you sneak that, Adeline? That was pretty good, wasn't it? So, but okay, Janine, before we finish up on our topic tonight, I just really wanted to briefly summarise what we said in our topic. Now, keep your hands on the sock and gaffer tape, okay? So
does that mean I get to use it?
Just in case I rattle on, all right? So I'm not allowed to waffle on. Now, banks are not suited to a buy and hold strategy, so you shouldn't be doing that. You still need to actively manage them to get the best returns and avoid major declines. My book proves that to you. Now, you've seen how the Big Four undergo similar moves to each other, so they'll all sort of work in unison with each other. And finally, remember to pick trending stocks. You know, it's really important you do that, so have some rules around what you're actually doing. Was that short enough for you?
I think you put more into there, but it's good. It's good. Really good.
Okay, well, you didn't get the sock out, so I was okay.
He was looking for something, but I wasn't going to bring the tape back out. Now let's get into some more emails, but before we do, remember to hit that subscribe button now, and whilst you're there, give us a big thumbs up and click on that like button.
Now we have a question from a lovely lady called Jen who says, "Hi Dale and Janine, love your show. Thank you for continuing insight you provide to all of us. I've been saving and buying small parcels of shares around $3,000 each time over the last 18 months. I currently hold Coles, Wesfarmers, Kogan, Cochlear, Woodside Petroleum, Macquarie Group, CSL, and except CSL, which is slightly down, all others are at or above buy prices as of Friday last week. The goal of my portfolio is medium to long-term investment. Now, I've recently received a small inheritance, and I'm wondering if I'm best to top up current shares or search for new opportunities. Would appreciate your thoughts. Thanks very much."
Really great question, isn't it?
It's a really well
good
thought out question.
Good stocks too in that portfolio, by the way. Congratulations on picking some good stocks.
It is. So she's got roughly 3,000 in all of them because she said most of them are slightly in profit, one slightly lost. So it's all around $3,000.
Well, that spreadsheet you did last week would be a really good example for this lady.
Yeah, absolutely perfect. So would you add to them? I think she's got, 5 stocks she's got?
Yeah, I think
so.
It was 5 or 6.
I wouldn't possibly add to those positions. I'd probably put new stocks into it.
Yeah, I agree.
I'd probably add 2 or 3 more positions if you could, depending on whatever you didn't say what the inheritance is, but let's say the inheritance is $10,000. Put another $3,000 into 3 more stocks.
Yeah, because the risk is quite concentrated on those positions that she's already got. So what you're talking about doing is actually diversifying the risk across more stocks, so that her exposure to one share across her whole investments.
Now, I think if she can get it out to 10 with the inheritance, still holding that $3,000 position size, I think I'd be happier with that than saying, put more money into these other stocks that she's already owning.
Okay.
I think, and don't be in a rush to put it in, and don't just dump it in straight away. Some people just go, "Oh, I've got this much money, I'm going to put it all in the market straight away." That's not necessarily a wise thing to do. Just if the stock presents itself, put the money in and get out to that around about 10 positions, and that'll diversify your risk. But really good question, and thank you very much, Jen, for asking that. Now we have a really great question. Not that the last one wasn't really great, but we have a really great question from Brad who asks, "Hi Dale and Janine, regarding your ideas around sectors that may perform better in 2021, finance, energy and materials. I have culled the dead wood from my portfolio and I'm looking to rebuild. Now, keeping to Dale's idea of about 5 to 8 good stocks, should I buy 2 or more good stocks in the finance sector or try to keep my portfolio more balanced?" Regards, Brad.
So do you add more finance stocks? I mean, that's always a challenge, isn't it? When you're looking at stocks that are going up, should it matter? Because in the top 20, for example, there's a concentration of financial shares.
Correct.
And that didn't stop the top 20 from going up, did it?
Didn't stop. No, it didn't.
So I would say, look, it depends. How many financial stocks?
He said 2.
2. I would say there'd be room in a portfolio of up to 10 shares. She said 5 to 8 though, didn't you?
Yeah, but I want to question that because I think a lot of people think they take things out of question. If you're
out of context.
Yeah, out of context. Did I say the wrong thing? I used a bad word again. To me, if you're a well-heeled trader, a knowledgeable trader, then having 5 stocks in your portfolio is fine because of the concentration risk that you have.
And the stop loss might be smaller because you've back-tested it and you're looking at your overall risk.
Yeah, and you understand what you're doing in the buy and sell rules. But if you're more of an investor or an active investor or not a highly knowledgeable trader, then I'd be going 8 to 12 stocks, not 5 to 8 stocks, because you need to diversify that risk out across more stocks because it really is like holding 5 stocks is a lot higher risk than holding 10. In that when you're talking about specific risk and stuff that we talk about in the book. So please, I don't know what type of investor or trader you are, so just look at that. But
the key is to actually do the calcs. So actually work out the numbers for yourself. Work out how much you're prepared to risk on each share.
Yep.
Do the calcs as divide that by the position size by the total value of the portfolio, and look at what that means in dollar terms as well as in percentage terms across the lot. So we've got a next question from Sanjay. "Hi Dale and Janine, I'd like to know how shorting a share in big volume might change price down, as I know shorting can be done only through margin or CFD account where you don't own the underlying asset. Please correct me if I'm wrong with margin account definition." Do you know what that means?
Yeah.
Like, I didn't quite understand what they're asking.
Well, basically he's saying he understands that shorting the stock market is on margin, and it really is. So So when you're shorting the market, you're actually selling a stock that you don't own.
Are you talking to them or me?
To them.
Yeah.
I'm explaining it to you as well.
No, but I mean, I know that. But what I'm saying is, what is he really wanting to know?
Well, I think what he's getting at is about when there's a lot of shorting in a stock, how does that affect the price? So, and in terms of, if we go, let's look at a high profile company.
But it's a very open-ended question. Because what's a lot of shorting? And it depends on the liquidity of the share and a lot of factors, doesn't it?
Well,
is the market going down at the time and therefore everything's being sold off and that's helping actually drive the price down?
Yep.
So that was why I'm asking for that clarification, because sometimes the quality of the question that you give determines the detail that we're going to give you in our answer.
All the time it does, doesn't it? If we understand the question a little bit better. But I think where he's coming from is looking at heavily shorted stocks, but he's also wanting to understand the margin side of it as well. And that's what I got from the question. So Harvey Norman, one of the most shorted stocks on our marketplace.
JB Hi-Fi is.
Those sorts of stocks. In the US, we had Tesla, gone up 1,100%, and yet it was one of the biggest shorted stocks in the US, but it still took off.
I guess a good way of doing it is to go and look on the ASX website and have a look at the short. They report the shorts every day, and you can see what volumes there are, and then you can go and have a look at the companies and how much stock is available on the market, and just determine that for yourself in terms of that. Yeah,
what I'm suggesting, I think, is just because a stock is heavily shorted doesn't necessarily mean the price is going down all the time. Because the implication is they expect it to go down.
It depends on what the equilibrium is, doesn't it?
Correct. It does really do that. But you are right, when you're shorting a stock, you have to do it in a margin position, which means you've got to put up a margin, which is generally cash, to a broker, and then they go and borrow the stock for you and sell that on the marketplace. So somebody actually owns the stock, but you're borrowing it. They sell it on the marketplace and you're in a shorting position. So that's really how it works. So you can't not do it unless you're in a margin position. But I would suggest that the ASX has some great little courses and booklets around this sort of stuff to help you understand what margin is and what shorting is. So they've got some really good stuff like that, haven't they?
They have, and they've probably got some good articles on their website.
Yeah, they've got some really good stuff. It's a little bit harder to find things nowadays. It used to be easier, and I don't necessarily like the updated ASX website, but don't tell them that, okay? It's just between us.
You're on next.
Thank you very much. Cool. Now, the next question we have is from Julia, who says, "Hi, Dale and Janine. Thanks for another great show. The stock Worley has me puzzled. I'm not sure whether I should sell, as I feel I'm in a bit of a risk situation. I bought the stock in November at $10.56 and watched it rise and then fall, rise a bit, then fall. And in hindsight, I should have had a trailing stop loss. What are your thoughts on this stock for the medium to long-term future?" So let's go and have a look at Worley, okay?
Well, if he's looking at the long-term future, this is the chart. Let's have a look at the monthly chart of Worley to see what the potential is there. So you can see that while the stock has come back a bit, it's not out of character with the personality of this share. It's not unusual to see it actually pull back. And the way that it's trending up, look what it did here. It was probably a little bit less volatile at times, but look at the month here in February 2017. It actually fell quite a way. So we've seen a decline, but over 3 months.
Yeah.
Since the high, it's not like it's just fallen in 1 month. So I'd say that potentially it's coming back to find support, but it is a challenge, isn't it? When you've just seen your share go up and you're sitting there watching it and it looks nice, but you know it's pulled back below your buy price or towards your buy price.
My view on that is it just means that she mentions they should have put a trailing stop loss on it. Yes, is the answer to that. But it just shows you the psychology that people go through when they don't have solid rules. Because if you're driving a car and you know the road rules, then you feel pretty safe. But if you drive in some Asian country where you don't know the road rules, imagine trying to drive somewhere like that where there's 1,000 cars going all over the place. You don't feel real confident. It's mayhem. And so that's how a lot of people work with the market. They only tend to get emotional and fearful if they don't understand what they need to do. And to me, that fear of the unknown creates that where they jump in and out of stocks at the wrong time and they do the wrong things. Right now, I like the stock at the moment. I think it's just having a little bit of a short-term pullback.
You can look at a pullback and think, oh, gee, the stock's fallen away. But then when you look at it on the monthly chart, it just looks like a small blip.
It looks great. So let's have a look at it on the weekly chart just briefly. Can you get it on? How did we do? I did it the wrong way. All right. Have a look at it now. What are you thinking now at the moment?
Well, it looks like it may be finding support right now. So you just have to wait and see, you know, what the stock does over the next couple of weeks. But ideally, you'd like to see it get back above this bar here in February.
So what kind of exit strategy would you put on? Would you have a stop loss on it?
Well, he did talk about medium and long term, didn't he?
Yep.
Yeah, so I mean, if the stocks come back to the buy price, then potentially you're talking about your initial stop losses, managing the risk.
This is Julia, by the way, too.
Yeah, Julia.
Not a he, it's a she.
Sorry, I apologise, Julia.
I'm not discounting a guy's got a name called Julia, but it's highly likely that's a lady. So,
okay. So, but it depends, if someone was buying it with a medium to longer term time frame, would you be exiting?
I'd have a 15% stop loss on that right now.
Yeah.
So that's really what I would actually be doing. And then if it goes above that previous peak that you mentioned, then stay with it while it's going up. I think that's sort of what my take on it is.
Fantastic. Now we have a question from Gary. Hi Dale and Janine, thanks for your great show. I've recently purchased your 2 books. I'm learning so much. I hope to enrol in your course soon to further improve my share trading knowledge. Would appreciate it if you could look at Linus for me. I purchased last year at 218 out of sheer luck rather than rules or analysis. At that time, it's recently hit a high of 680 after falling back to $6. I've set a trailing stop loss at 15%, which has nearly triggered this week. Do you think it's had its run or is there further upside? Thanks so much. All right, let's have a look at that chart, shall we?
Wow.
So you can see there, long-term picture, it looks really strong.
It does look very, very strong.
Okay, so we've had a number of months off. It's taken off perfect timing. You couldn't have picked it even, there were rules there to buy on it, but he's done really well. So looking at that run, I mean, a nice trend line might work under it, but then it just depends on being able to fit the trend line up underneath that accelerated rise. So, what do you think about Linus?
Well, right now, I mean, I don't know whether 15% stop loss is, in my mind, is it a 15% trailing stop loss?
Yes,
is that too tight?
That's what he'd be saying, but he'd be talking about from the high, which we don't do those sort of stop losses.
Well, we generally don't, not for trading. I talk a bit about it in the book more for investing or active investors as like a fail-safe
because
exit.
they don't know any rules.
Because they don't know technical rules. But is 15% on a stop loss, on a trailing stop loss on this, is that too tight?
But and it's a good point that you've raised because it is a more volatile stock. And we know that stocks can come back anywhere between 10 and 20% as part of a pullback. So it's really about having a look at the history of the share and seeing what does it typically do when it pulls back.
Well, let's bring it up. Let's have a bit of a look. We've got a little bit of time, so let's go and have a look at the monthly chart. So we're a bit ahead of schedule, but looking at some of these pullbacks, is that what I'm talking about, that one? So we're looking from here to here.
Now you're looking on the monthly chart.
I know, that pulled back 67%. I'm
so
going to
that's
go to the
probably
weekly in a
a
minute.
bit useless to us at this point, isn't it?
All right, have it your way. I'll go to the weekly chart
Thank
if you
you.
like. I'll go down, here we go. Look, there's the weekly chart, magically. But looking at some of these moves it has, let's look at some of these shorter term moves, okay? That move there was what?
Yeah, so what you're saying is in a couple of weeks it can fall 25%.
It doesn't need to take much. And so, setting a figure like 15%, that's 18% over those few weeks there. Let's just keep putting things on it. There we are, look at that, that's 55%. Let's look at some of these smaller moves. And even that, we're talking about 15%. So why would you exit? And because he would have exited on that and then seeing it move up and doing some pretty nice things. So right now, my thinking is just based on this.
So the trend line might work really well on it.
I think a trend line's going to work a hell of a lot better than that. So if you haven't, did he say he bought my book?
Even if he did Trading Mentor, there's probably some strategies in there.
Well, he's looking at doing one of our courses, so I would suggest that. But right now, I think this is just a magic trade. I think it's a really, really nice trade. And I understand wanting to protect it.
You can relax in that situation.
Yeah, you've got no risk at all. So I would just probably maybe even put it on a monthly chart and put a trend line underneath that on a monthly chart and just... And
look,
relax.
I mean, it would be quite okay just to pocket the initial investment so that way you're trading totally with the market's money and not your own.
Well, which is what with that concept that we talked about last week, that person was asking about free carrying a stock.
Okay.
That's really what it was about. I had some people saying, well, what he means is they just pulled their money out of the marketplace. So, and whilst we generally don't do that because it's more for a highly leveraged situation, getting your money out of the marketplace when you're running trades really hard with lots of leverage, not necessarily for cash positions.
But when you're talking about someone who's also new to the market and doesn't have really solid rules and needs a bit of help, that's a really good idea, I think.
But the question then is when a stock's in good profit, does the person think all that money that the stock's made, is it their own or not? Just by taking your initial capital out of it, does that change the psychology at all?
I think it would, like especially for a new person. the fact that they've got that money, they're risking their profit at this point.
Yeah,
And how
it's
much
just your
profit
profit.
do you want to risk? Really, it becomes that question, doesn't it? Because
Well, it does.
look at Blackmores. Was it Slater and Gordon? Who would have thought that, I think it was their shares were just booming, who would have thought that they would have got pummeled to the degree that they did?
Yes.
So you might have been sitting there thinking, all this time I'm doing so well, but all of your money's on the table, not just what you originally invested, but all your profit as well.
Yeah.
So to me, when you're talking about trading these stocks that are in that lower end, I think it's well and truly justified doing something like that. But again, you've got to make your own decisions.
Okay, all right.
Now, for a little change of pace, I wanted to share an inspiring quote from Ben Franklin, who said, "An investment in knowledge always pays the best interest." Good one. Right now, you're investing a small amount of your time watching our free YouTube show in order to gain some knowledge around investing and trading stocks. And if you follow what we're sharing, it will pay you time and time again. There is another saying, the more you learn, the more you earn. So imagine what you could achieve if you undertook one of our courses.
Very good point, Janine. I love looking at some of those quotes. They're pretty apt. We used to put them all on our Facebook page.
You're the king of quotes, aren't you?
I am the king of quotes.
Don't you have them throughout your book as well?
Yeah, well, yeah, we've got quotes all through the book. One of my favourites is a one from Zig Ziglar. He says, "If you're not willing to learn, no one can help you, but if you're willing to learn, no one can stop you."
That's lovely.
And that's really one of my favourite quotes that I have of all time.
Inspiring.
Yeah, he's a very inspiring person. That's one of my favourite books. See at the top that he wrote back, I think in the 70s, I think, and I was lucky enough to meet him one day, so I'm sure you'll hear about it. If you listen to my podcast, you'll hear me talking about it. But I think we've got our last email question for the night, I think, but let's get back to those email questions. And again, this is our last email from the night, and we saved the best for last. John, it's your turn now. John says, "Hi guys, I love watching your Tuesday show. I have purchased both books, almost finished reading one, and wow, it's amazing. We'll be going back to basics and we'll definitely be looking at one of your courses in the near future. I'm looking for help in a couple of stocks from the top 20. What are your thoughts? I already have BHP, BAP and CWY, still holding from 1 year ago. Looking forward to your response." So he's looking for a couple of stocks in the top 20. So what are we going to
I can understand that because he's got a couple of little shares in there, hasn't he?
Yes, he does.
Yeah, well, look, we've just done a discussion on the financial sector. So
had one of those at least.
Yeah, you'd think the financial sector would be a good part of it if you're looking for top 20. But what about a really growth stock? I would say anything you could find in energy or materials would be another one to look for. But materials have more or less run on a bit, haven't they?
Yeah, they have a little bit. So you're talking about like an oil search or a...
yeah, so look, energy, I'd say, like for me, and this is just my personal preference, I like Woodside.
Woodside, that's what I was trying to think of the other one. I'm thinking oil search and I went blank.
Yeah, that's a smaller one. Yeah, so, and some people like to buy the consumer staples stocks. Yeah. So some people like to have a Woolworths or something more ploddy in their portfolio, or Coles, but you'd need to wait for an opportunity for those stocks to prove that they're actually going to keep going up. Wesfarmers I always favour. That to me is a good long-term opportunity, but when the time is right. So obviously it's got to be continuing to move up.
Yep, CSL's been going there more recently, but I wouldn't
So that's one I'd get
one.
ready for. Yep. Like I wouldn't be buying it right now, CSL, but I'd be waiting for that one in the future. So they're all good shares, aren't they?
Yeah, so just look in the top 20 and with my book you can see there's trend lines on there. So just draw some trend lines on monthly charts as my book says, or my first book says, and I'm sure you'll be able to find one of those top 20 trigger. And it's interesting when we're looking, I was looking at the spreadsheet that we did for the latest book, and I was trying to find for tonight, looking at the financial stocks, the actual yearly returns for each of the banks over a period of 10 years, just to show people what they do.
Yeah.
And I didn't get enough time to pull it all out, but I want to try and do that and show people how some of these top 20 stocks unfold and the consistent returns, like, you know, Cochlear and CSL deliver over 10 and 20 year periods.
Yeah.
You know,
I mean, we looked at
and
that,
Macquarie.
but some of the banks, including NAB, really underperformed, didn't they?
Yeah, NAB underperformed, but even though it was a big four bank. But so what are the better performers? And I think you've best mentioned all the good ones there.
Yeah.
But don't necessarily think you have to
Westpac
get in straight away. It's when they give you the opportunity to buy into it. I think that's really what we're saying to it.
Look, thank you to everyone who contributed to the show tonight. The more people that ask questions, the more we'll share our thoughts and knowledge on trading and investing, and the more everyone is going to benefit. That's just the natural law of the universe, isn't it? Remember, watching this show is only part of your journey. You may have a question on your mind, or maybe something's holding you back that we can fix. So do something for yourself and take the time right now to share this with us by sending in an email. We're looking out for you.
Absolutely. Absolutely. Now, we hope you've enjoyed tonight's show, and may I give a big thank you to those who participated. If it's your first time, welcome and thank you for being with us. If you are serious about understanding the stock market and how to consistently profit, then do something for yourself and call our office on 1300 858 272 or just email through at info@wealthwithin.com.au and say, hello, I need to talk to you guys. You will be speaking to real traders. Even the person picking up the phone's a trader, and they've been where you are now. They've had the same fears, the same goals, the same ambitions. So you will find that they're really here to help you understand what you need to do in the journey. And best of all, you know, they really are help you make your journey easier and faster. So don't be a stranger, in other words. Now, Janine and I are also here to support you. So now it's your turn to support us and hit that subscribe button and show your support for us. Also, like the video so others like you can benefit from what we do. And remember to share it on your social media. I think that's really important as well.
Now, I thought I was going to have to tap you on the back there just to help you get it out.
No, I've got the sock.
If you enjoyed this week's show, then put into your calendar to join us right here on the live Australian Stock Market Show every Tuesday at 7 to 8 p.m. If you would like to have your question answered on the next show, or if you have a topic you'd like us to cover, then send an email to info@wealthwithin.com.au, type Wealth Within Live in the subject line, and you must do this before 3 p.m. on the day of the show.
Now, as always, thank you for joining us, and we hope you have a fantastic week. We look forward to you joining us again next week, but for now, goodbye, good luck, and good trading.
Bye for now.
I almost bought Explorer socks in, but I thought your mouth is not that big, so I just got a petite one.
You better watch it.
I'm going to get in trouble, aren't I?